Good morning. It's Thursday, August 15th, about 6 a.m. Central Time. Overnight, the precious metals are exploding after yesterday's complete hatchet job. You've got December gold up $16 at $24.96. September copper up 1.73% at 411. That's a small breakout. September silver up almost 3%. That's up 80 cents at 28.15. More importantly, that's testing yesterday's high. But first, I want to look at what happened yesterday. The monthly measure of CPI hit 2.9% year over year. That's the smallest increase since March of 2021. The headline inflation was 0.2% on a monthly basis, in line with the expectations. The core, which was also in line with expectations. So you got everything you wanted. Gold ticked up to about 25.19, looked like it was going to break out to the upside. I really thought we were going to get a solid shot at going and retesting those all-time highs. Silver hit 28.17 before this rotation occurred back into U.S. equities. It triggered profit taken in the gold, which weighed out on silver, which led to stop-loss selling. So I want to describe yesterday as more frustrating for gold and that silver was just collateral damage. So we got to play the game we're in. That's just the game that we're in right now. So moving on. So overnight, and this is what I think that really a lot of people that are trading silver need to really monitor, because of the fact that it is 54% industrial in industrial metal. It's closely correlated with the copper market, much more correlated with copper than gold right now. So China's economy continues to struggle. It suggests that their government must provide stimulus in order to meet its 5% economic growth target for the year. The lack of confidence among businesses and consumers potentially reduces investment and spending. So home prices in China, they're continuing to decline. Their unemployment rate, which I'm surprised that they still are publishing. I know that they stopped publishing it for people that are under the age of 20 or 30 years old, something like that. It ticked up to 5.2% versus expectations of 5.1. The retail sales, it's hardly worth discussing whatsoever. Any number that they throw up there, it's irrelevant because they're dumping their products on other countries. Other countries are actually protesting them because of the fact that they're dumping it. So their government will eventually have to implement stimulus measures, which should provide a tailwind for copper and then ultimately silver. And as long as you get gold prices elevated near these all-time highs, that's going to be the 1-2 punch that the silver investors are waiting for. So we're starting to get a little bit of it. You really need the stimulus, but you need the stimulus in China well received, where it's like the first round of a continuation, not a one and done type deal. So just going to move on there, but that's the reason why you got this big uptick here. It was nothing in the U.S., nothing geopolitical headline. Now, we do have a ton of data coming out. It's just almost too much to even list. We've got everything from retail sales to unemployment claims. Unemployment claims are really the one that I'm going to be looking at, and the retail sales. So the core retail sales month over month expected 0.1. Last month was 0.4. So we're looking for, the consumer really could be mixed. They tend to rotate. They tend to buy a lot of things. You got clothes that go on sale, and you got clothes that, they're switching to their summer outfits, whatever. But you go to the unemployment claims, small uptick expected, 236,000. Previous was 233. So you're also going to have Philly Fed, Empire State Manufacturing Index. You'll have a couple FOMC speakers, one at around 9:10 and then one at 1 p.m. We also have natural gas storage and mortgage delinquencies. We just got a ton of stuff coming out. So, if you get this kind of move in the metals, we don't get any follow through at the 7:30, you're probably going to see them dump it off just a little bit. The volatility ranges are starting to expand out a bit on the precious metals. So like gold, the upside probable range with today's type of move, we could hit about 25.06, and then above that would be 25.27. The downside is a complete rug pull down to 24.95. The same thing with the silver market. Remember, the average range on silver is like 97 cents. So they could pull this thing all the way down $1 if they really wanted to. Yesterday's chart pattern, outside bearish reversal. Today recapturing $28. That's why I think yesterday was a complete hatchet job on the market. Nothing to really do with specifically things with silver. Now, if you look at the CME's Fed Watch tool, and I really think this is what we want, especially if you're like a gold investor or silver, I don't think you want the Fed engaging in a one and done. They do 50 basis points and then all of a sudden they're like, we're going to wait, we're going to wait, we're going to wait. If they do that, then I think that prices are going to start to come down, because the chances, if things naturally decline on or remain elevated as far as inflation, the Fed may be way more patient on the next interest rate cut. What I think you want to see is, I think you want to see a series of multiple, like China with multiple stimulus measures. You want to see 25 basis point, 25 basis point, 50 basis point as things deteriorate. Things like that, where you get these multiple interest rates, and that slope and that rate of change is, I think, what propels this gold on a snowball effect heading higher. So you got a 62.5% chance that the Fed only cuts 25 basis points. You look at yesterday, it was a little bit higher, but I think that the rotation is really that big. I think you just want to see these 25 basis point interest rate cuts. So looking at the gold chart, really your first resistance point is going to be a small pivot at 2,500. When that number came out yesterday, we consolidated at 2,500 on that first pullback. That's why I thought we would have held it, and then anything after that, I think it was profit taking, stop loss selling, and rotation. So look at 2,500, 2,506, 2,519 are kind of your key levels today. Look at a chart. Do yourself a favor if you're a silver investor. Just look at a daily chart on the copper market. Could be forming an upside down head and shoulders pattern. We need to get back over the 200-day moving average at 415. We could threaten 428 on up to about 432. That's the trend reversal. Takes it back to neutral trend. Flips it onto the bearish or the bullish trend if we get back above potentially the 50-day moving average. But we'll see here. I think that they're initially going to sell the rallies on the copper market because of the fact that they're just playing the narrative that they're in, not what they're forecasting out, which would be Chinese stimulus. You do have silver, kind of a much weaker head and shoulders, reverse head and shoulders pattern. You need to get DMI plus over minus in order to get any substantial bang. You got to close above. You basically got to close at this level or higher. That would be one of the highest closes we've seen in several sessions, at least since that August 5th sell-off, and the August 5th, that high 28.81. I think that that's like really your first wake-up call where some kind of bottom is in on the market, and we're going to start threatening the 50-day and things like that. So a little bit longer video. I'm going to be traveling, so I might not be able to do a video tomorrow, but I will give it my best effort. Especially if something dramatic happens today. So you guys got any questions, reach out. Give me a call, 312-858-7303. Remember, futures and option trading involves risk of loss. May not be suitable to all investors. Good luck, good trading.